Markets are calmer, but should investors brace for more turmoil ahead? Welcome to Market Insight. I'm David Pollard. Notwithstanding some soothing noises from Fed policymakers in recent days, there's little doubt that anxious times could still lay ahead after the torrid sessions seen in markets of late. All, of course, as US recession fears crept back in and impact of the yen's sudden surge ripple out. So could next week be a key moment for markets? Well, joining me now is Adam Phillips, Director of Investments at EP Wealth Advisors. Many thanks for joining us today, Adam. Is the all-important yen carry trade fully unwound now? And even if it is, are we in for more volatility in markets anyway?
I think that's the big question right now, is how far has the unwinding of this carry trade gone? And the reality is I don't think anyone really knows for sure. We suspect that we are towards the end of it, but we also want to brace for a potential further unwinding. And if that does happen in the coming weeks, we believe that the areas of the market that are most vulnerable are Bitcoin, are high beta plays such as those high flying stocks. We think those are really, they've been the beneficiaries over the last 18 months or so of the carry trade, and so they have the most to lose here. But either way, if the yen carry trade has further to go in its unwinding or not, we do believe that we are now in a period of higher volatility. We've seen that the markets are now on pace to finish the week essentially flat after really getting off to a tough start on Monday. And even though we don't expect volatility to resurface like what we saw on Monday, we still think that it doesn't just simply go away. We typically find ourselves in a period of higher volatility. And let's face it, the last year or so really hasn't seen a whole lot of it. And so in a way, we were due. And so we are bracing for a little bit more choppiness ahead.
Well, key to the outlook, of course, is the Fed, where policymakers in recent days say they're not paying too much heed to what's happening in the markets, but they are confident that inflation is cooling. What could that signal in terms of rate cuts ahead?
Well, we're confident that inflation is cooling as well. We do expect the Fed to cut at their next policy meeting, which is set for mid-September. We expect they'll cut either 25 basis points or 50 basis points. The reality is that it's just not clear just yet, and we have a ways to go. It's going to seem like an eternity before we get there. So unfortunately, I think many investors are going to be left with their thoughts and dissect the data just as we will. I think for the Fed, what's really important is that, I'm not a climber, but I compare it to the fact that if you're scaling a mountain, then you have adrenaline, you have this conviction to get up there, but you need to be very, very careful on the way down when you don't have that same confidence in each step. And so that's really what they're going to be doing here. They've raised rates so much, 525 basis points over the last couple of years, and now they have to make sure that they plot the course ahead in a very deliberate and careful manner. But we do expect the first rate cut to come in mid-September, and we expect them in 2 weeks at the annual Jackson Hole Symposium to provide a more dovish announcement and really set expectations for investors heading into that meeting.
Well, as you alluded to there, it's a big week for data. Next week, US inflation, retail sales, consumer confidence, all in the diary. What picture will we see? And will that picture, do you think it'll have storm clouds gathering in the background, hinting at recession?
We expect the inflation data to really show more of the same. We believe that we are firmly on this disinflationary track, heading back towards something that's more healthy, call it that 2% range or so on inflation. And so we expect the CPI print that comes out on Wednesday to show that. We do see retail sales on Thursday. It's likely to show this additional stress that we've seen among consumers and the threat to spending going forward. I think what's now becoming increasingly important is the weekly jobless claims data. We saw yesterday that the data came in a little bit better than expected, and that led to quite a strong rally and rebound in equities. And so for something that used to kind of go be below the radar for many people, it's now taking on an additional level of importance here because many are so glued to the economic data and specifically the employment data, as they are worried about what has become a major softening in the labor markets.
Now, in your notes on your positioning, you say you're neutral on risk. You mentioned a couple of areas of concern there, Bitcoin, high beta stocks and so on. But where are the opportunities in this current environment? Where do you see value?
So the reality is that the winners of the past 18 months or so are unlikely to be the winners on a sustained basis. We believe that we are in a period now where we are going to see a rotation from those high-flying tech plays, most of those that are associated with artificial intelligence, to the rest of the market. And so we are focused on, if much of the focus of late has been on the Magnificent Seven, we are focused on the S&P 493. We want to focus on companies, specifically some within the industrial sector, healthcare sector, that are still high quality, have strong balance sheets, they have strong earnings visibility going forward. And we believe that to an extent they've been left behind in recent months. And so on a relative basis, they offer better valuations. One of the interesting things is that we are towards the end of the second quarter earnings season, and we are pleased to see that earnings growth is starting to broaden out, and we expect that to continue going forward. We think that that will serve as a catalyst and basis of support for the broadening out of returns in the market. And so we are focused. It doesn't necessarily mean you want to abandon those high-flying or major growth plays, but you certainly want to look beyond them as we go forward.
Okay, Adam, it's been good to hear your thoughts. Adam Phillips, Director of Investments at EP Wealth Advisors, many thanks for being with us today. That is your Market Insight. Don't forget you can watch more videos on Reuters.com.